Meantime, more earnings to tell you about. ExxonMobil's first quarter profit was nearly cut in half from a year ago due to that decline in oil prices. But the results were enough to beat lowered earnings expectations pretty much by a mile. Shares of ExxonMobil dropped today, but of course that was along with the rest of the market. Jackie DeAngelis has more.
A big beat for ExxonMobil, even if expectations were drastically reduced. Revenues are down more than a third from a year ago, almost mirroring the 40% drop in oil prices during the last 12 months. Exxon and other energy companies are all making moves to reserve cash. CEO Rex Tillerson saying the company doesn't expect oil prices to rebound quickly, despite the roughly 10% bounce we've seen so far this year. Oil prices are hovering near their highs for the last year, but traders agree crude could stay near $60 a barrel for some time.
I do think oil has found its short-term bottom. Dollar influence is number one. There's a few other factors that's also supporting prices. If you're a company, an oil producer right now, and you survive the $42, I certainly see a brighter future ahead for you.
Investors took notice when its report mentioned lower crude prices improved the profit margins for its refining operations. A 4-cent dividend raise to 73 cents a share also made investors smile. Refining profits are a common theme this week, softening the blow from reduced overall earnings for Royal Dutch Shell, BP, and Total. Smaller companies that don't have big refining operations have not fared as well. ConocoPhillips also beat by a penny. It was one of the first big U.S. oil companies to cut back on exploration spending. Tomorrow, we'll hear from Chevron, the key to its earnings report if it'll slash its capex even further. The company is looking at a 13% cut right now to $35 billion. But will those plans change? Exxon is sticking to its capex cuts, 12% for 2015. The question investors are asking is, when will these capex cuts start to impact U.S. production?
I think the capex cuts that were announced at the beginning of the year have started to take effect already. If you look, there's not any new rigs being deployed right now. A lot of rigs, 52% of them, have shut down. And what we're seeing as far as supplies go, it's starting to make a difference.
Though crude prices are stable for now, the longer-term picture is still volatile. And that means exploration spending cuts will likely continue. For Nightly Business Report, I'm Jackie DeAngelis.